Hey everyone, welcome to The Explainer. I'm so pumped you're here today because, well, we're going to look at something that literally transforms how you see the financial markets. We're unpacking this seriously powerful presentation by Professor Saladin KRIT, the founder of KRIT Academy. And look, their mission is just phenomenal. They are all about helping students, researchers, and future traders build real, concrete skills to totally demystify the markets. And today, we're doing exactly that. We are diving into the golden rules of order flow and delta. This is exactly where we stop guessing and start actually seeing what's happening behind the scenes.
All right, so here is our agenda for this explainer. First up, market anatomy. Second, we'll get into understanding delta. Third, the golden rules. Fourth, traps to avoid. And finally, practice in the markets.
Okay, let's dive into Section 1, Market Anatomy, and specifically why traditional methods fail. So why do so many traders fail when they just rely on traditional Japanese candlesticks or your standard indicators? I mean, think about that absolute frustration of entering a trade based on a perfectly shaped candlestick, right? Only to have the market instantly reverse on you. We've all been there. It happens all the time. But why? Well, it's because those traditional methods are lagging. They're showing you what happened in the past, not what's happening right this very second. You're basically trading blindly, kind of just hoping history repeats itself without actually knowing who is in control of the market right now.
So, traditional indicators are lagging, they're theoretical, and they're entirely based on past price. Order flow, on the other hand, is like an X-ray machine for the market. It literally lets you look right under the hood. Instead of crossing your fingers and relying on a moving average, order flow shows you real-time actual transactions. By using tools like footprint charts and the depth of market, which, essentially show you the pending buy and sell orders at every single price level, you can see exactly who is buying, who is selling, where the pros are stepping in, and where all that heavy liquidity is sitting. Honestly, it's the difference between guessing the weather and looking at a live 4K radar.
Moving right along to Section 2, Understanding Delta, the heartbeat of the market. So, how exactly do we read this radar? Well, it all comes down to delta. Delta is simply the difference between the volume executed at the ask, so our aggressive buyers, and the volume executed at the bid, which are our aggressive sellers. Think of it like a giant real-time tug-of-war. Every single second you've got aggressive buyers lifting the offer and aggressive sellers hitting the bid. Delta just calculates exactly who is winning that war in real time.
Now, what's really interesting here is that when you break down the math, it's actually incredibly simple. Let's say we're checking out our order flow tools, and we see that 520 contracts were bought at the ask, and 350 contracts were sold at the bid. Well, 520 minus 350 gives us a positive delta of 170. This number isn't just some random abstract statistic, it's visual mathematical proof of buyer dominance in that specific moment. The buyers are absolutely stepping up with more aggression.
You can kind of think of this as your personal cheat sheet for instantly reading market pressure. When you see a positive delta, boom, that's buying pressure. A negative delta, selling pressure. If it's near zero, the market is in equilibrium, meaning the buyers and sellers are matched up, and you're probably just in a consolidation phase. And if you see a very high delta, whether it's positive or negative, that points to a strong market impulse. The professionals are stepping in heavily. Once you get the hang of it, reading these signs becomes completely second nature, and you can gauge market aggressiveness instantly.
All right, let's hit Section 3, the golden rules, which is essentially your trading checklist.
So now that we know how to read the market's heartbeat, we definitely need some rules of engagement. These are the absolute golden rules every KRIT Academy student has to memorize. Let's group the first set together for entry in context. Rule 1, always trade with the dominant delta. Seriously, do not fight the tape. Rule 2, never use delta alone. It's not some magic standalone tool, you have to confirm it with market structure, like your support and resistance levels. Rule 3, wait for confirmation. Look, the best traders out there are incredibly patient. Don't just jump in on the first candle. Wait to actually see absorption or rejection. And Rule 4, watch for price and delta divergences. So if the price is making a new high, but the delta is dropping, that usually means the buyers are totally exhausted, and a reversal might be right around the corner.
And this brilliantly illustrates rule number 5, which honestly might be the single most important quote in this entire explainer. Volume is more important than price. A movement without volume is often a false movement. If you see the price suddenly shooting up, but you check your footprint chart and there's absolutely no volume backing it up, it's almost certainly a trap. Always check the volume.
Okay, moving into the mechanics, let's run through the rest of your rules. Rule 6, identify absorptions. This is when heavy buying hits the market, but the price just stops moving up. It means sellers are absorbing those orders. Rule 7, avoid FOMO. Never ever chase a runaway market. Rule 8, Respect key levels. Professional zones like the VWAP, the volume-weighted average price, or the point of control, the price level with the highest traded volume, these areas attract massive volume. Rule 9, context is priority. Even a fantastic delta signal is going to fail if you trade it right into a major resistance level. And finally, Rule 10, risk management is absolute. You have to use a stop loss and strictly limit your risk to just 1 to 2% of your capital per trade. Literally no exceptions here.
Next up is Section 4, traps to avoid, or rather, some very common mistakes.
Because look, knowing the rules is one thing, but actually surviving the market means knowing what pitfalls to watch out for. Consider this your strict what not to do checklist. These are the deadly amateur habits that will just drain your account. Trading based only on delta without looking at the big picture. Ignoring context. Entering a trade way too early before getting real confirmation. Ignoring the volume, which, as we just talked about, is a massive mistake. And honestly, perhaps the two worst offenses of all. Moving your stop loss once it's already set, and overtrading. Oh, and trading blindly during major economic announcements? Yeah, that's a surefire way to get chopped to pieces. Just don't do it.
All right, let's move to Section 5 and see how this builds into practice in the markets with a couple of case studies.
Let's actually take the theoretical rules we just learned and apply them to a live market scenario. We're going to walk step by step through a totally perfect support buy setup. Step 1, you watch the price approach a known support level. Step 2, you don't just blindly buy, you check the order flow. You see a solid positive delta with high volume coming in, and the footprint chart confirms there's no massive seller absorption. Step 3, with the order flow fully confirming your entry, you execute your buy decision. And Step 4, you immediately place your stop loss safely below that support line. Guys, that is exactly how you execute a trade with precision. Now let's contrast that exact setup with a trap. Imagine the price hits an exciting new high. It looks like a classic breakout scenario, right? Amateurs are going to rush in to buy. But Step 2, you look at your X-ray machine and you notice the delta is heavily negative, even with all that high volume. Step 3, you realize this is seller absorption. The sellers are totally taking control and just dumping on those eager breakout buyers. So Step 4, you just avoid the trade. By seeing the real-time order flow, you literally just saved yourself from a fake breakout that definitely would have stopped you out.
Let's summarize the core philosophy laid out by KRIT Academy here. Order flow is magnificent. It reveals the true market reality and pulls back the curtain on what the professionals are actually doing. But as Rule 10 states, no trading method ever guarantees a win. Order flow doesn't just magically eliminate risk, it just gives you a much clearer picture. It is rigorous, absolute risk management that actually keeps you in the game for the long haul. Remember, this explainer is strictly educational, but the discipline it's teaching here, that is very real. So I want to leave you with this one thought. Now that you know you can literally see the real buyers and sellers through order flow and delta, how will you adjust your very next trade? Are you going to keep trading blindly, or are you going to flip on the X-ray machine? If this sparked your curiosity and you really want to master these tools, I highly encourage you to explore the full courses offered by Professor Saladin KRIT over at KRIT Academy. Thank you so much for joining me on The Explainer today. Keep learning, and I'll see you next time.